Micron Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Micron.
Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's take a look at what happened overnight. Investors largely cautious ahead of inflation data in the US and Europe, and also French parliamentary elections, which will take place this weekend. Now, US stocks were little changed as bond yields and the US dollar eased. The megacaps were mostly higher, although Nvidia fell. Micron Technology also fell after a fourth quarter revenue forecast that came in line with forecasts, but disappointed investors looking for more upside from the memory chipmaker's performance in the AI boom. Shares in Walgreens Boots Alliance slumped after it cut its 2024 profit forecast and flagged plans to close more underperforming stores. Denim maker Levi Strauss fell heavily after falling short of expectations for second quarter revenue. And shares of the world's largest sportswear maker, Nike, have fallen in after-hours trade as it revealed a miss on quarterly revenue. Well, US gross domestic product increased at a revised 1.4% annualised rate last quarter, up from a previous 1.3% estimate. And new orders for US manufactured goods unexpectedly fell in May, while weekly jobless claims fell to 233,000, which was lower than forecast. Meanwhile, Atlanta Fed President Raphael Bostic has said US inflation appears to be narrowing, and on that basis, I continue to believe conditions will likely call for a cut in the federal funds rate in the fourth quarter of this year. Whereas Fed Governor Michelle Bowman has said we're still not yet at the point where it is appropriate to lower the policy rate, and I continue to see a number of upside risks to inflation. Well, the US 10-year Treasury yield dropped after the economic data to 4.28%, while the two-year yield was down to 4.71%. And signs of a softening US economy saw the US dollar fall. The Aussie trading at 66.6 US cents. Well, joining us now is Robert Swift from Delft Partners, who is... there you go, you've popped up. Robert, good to catch up with you. All right. Let's take a look at what's going on globally at the moment. Of course, inflation very much in focus. We've had higher than expected reads here locally. Canada, we're getting a read tonight out of the US, plus in Europe as well. What are you seeing at the moment?
Inflation is indeed stubborn. We'd all like it to go lower, not the least of whom are central bankers who'd like to declare victory. But we can't see anything but base effects coming to the rescue. That is to say, the year-on-year rate will probably fall, but underlying inflation pressures are still going to be present, particularly, if not solely, in the West. And of course, the inflation problem is that politically, it's going to be difficult to raise interest rates in various countries because of the election cycle. And so our best guess is that inflation is going to be underlying nearer 3 to 4% than it is going to be 1 to 2%. And that has some serious implications, of course, for consumer spending power. And that's what we're beginning to see from results in the USA, certainly at the moment.
Yes, so you make the point that inflation is eating away at that disposable income. Certainly we're seeing that here and also in the US. However, is that the case in China?
So that's an interesting question, really. And I think that the Chinese have come under much criticism for not following what we know now as the Washington Consensus, which appears to be you pump prime asset prices in the face of any fall in economic activity or asset price decline, and you hope that somehow those asset prices rescue the economy. The Chinese have chosen not to go that route. We know very well that the property prices have fallen. They've been quite vicious about penalizing equity and debt holders in some of the big property companies in China. They're following a different path. And as a consequence, what we're seeing in China is that real incomes are growing. Real incomes in China in the last 8 to 10 years have grown at about 3 to 4% real. Inflation there has been only 1.6% per annum compared to the USA at 3.3. And so US real wages haven't grown. Real wages in China have grown. And it may well be a catalyst such as a feeling that the market has bottomed out in property, or it may be some other catalyst such as a realization that growth is coming back in China. But companies that have invested in China and are exposed to the Chinese consumer may do very well from here.
All right.
Certainly.
Sorry, I was just going to say, in particular, retail. What are you seeing there at the moment?
So one of the big themes at the moment is sportswear. One of the big themes is athletic wear. Athletic wear. This is the chart that shows the wage prices. I think I can't see because of the. Let me just remove this if I may.
Well, that's retail sales both in the US and China. Yeah. Yep.
So retail sales in China. Thank you. Retail sales in China have been rising. They're in the blue line. I think, and what we're seeing in the next chart, if we can show you, is that those companies that are exposed to Chinese retail spending are doing very well. The green line is a Japanese company called ASICS. We have, as you know, been very keen on the Japanese companies in the Japanese stock market. ASICS is essentially a rival to Lululemon. It makes sportswear, sports shoes, etc. It's a very hot theme at the moment. People are beginning to exercise, having come out of COVID, of course. And you can see the share price of ASICS, which is more exposed to China than Lululemon, which is everybody's hot stock, everybody's hot leisure wear, yoga wear company. It's massively outperformed. Even companies listed in China, such as Anta, have done better than Nike, which is the line in the middle there. So what we're seeing really is that if you're prepared to invest in the idea that the Chinese consumer is going to be in a healthier position than the consumer in Australia or indeed the USA, then you don't have to buy Chinese listed companies. You can, in fact, invest in Japanese listed companies that are quite well exposed to the Chinese consumer. We're beginning to even get much, much keener on a Japanese cosmetics company called Kao Corporation. And that has recently bought the company here in Australia called Bondi Sands, and it owns Molton Brown as well. So it's a much higher price point in terms of its exposure to the Chinese consumer. But the company is restructured, and we think any small pickup in what you might call top-end spending in China is going to really impact upon the bottom line there for that company. So our message is continue to invest in places where the consumer isn't being clobbered by inflation.
That's a really interesting perspective, particularly given what we're seeing compared with US and China. Robert, great to get your view. Thanks for joining us from Delft Partners.
Thanks, Andrew, and sorry about the tech snafu.
All good. All right, let's take a look at where we're likely to get going when we open. As you can see, positive there, up a third of a percent. SPI futures, which, if that pans out, would wipe out what we saw in terms of those losses. We'd see they reclaim that movement today. Stay with us. The open is just a minute or two away.